Technology and AI are changing our lives faster than ever, from the phones in our pocket to the cars that we drive. And here's the exciting part. Tech and AI have been some of the biggest drivers for market gains over the past decade, consistently beating the broader market. And it's not slowing down either. AI investment is surging, semiconductors are in record demand, and companies everywhere are doubling down on automation and digital transformation. But here's the question. How do you invest in this trend without having to pick one potential risky stock? That's where ETFs come in, and today I'm going to break down 3 of the best ETFs that invest in tech and AI on the market today. They'll give you instant diversification and exposure to a lot of the companies that are driving innovation. Stick around because each of these ETFs provide a slightly different angle and one may fit your portfolio better than another. So first up, we have the Legal and General Artificial Intelligence ETF with the ticker symbol AIAG. So this ETF focuses on companies that are developing and also enabling AI rather than using it for their own purposes. This provides exposure to the AI ecosystem, which includes software, semiconductor technologies, and even robotics. AIAG gives you exposure to 53 companies globally, providing a simple way to invest in the AI megatrend without having to pick individual stocks yourself. Some of the key holdings include Nvidia, Taiwan Semiconductor, Google, AMD, and Datadog, all of which are central players in AI hardware, software, or even the infrastructure. Now, as you'd expect, this fund has a strong focus on technology, with significant US exposure, which is unsurprising given the dominance of US AI and tech companies. It also includes companies from Europe and other developed markets, offering some geographic diversification alongside concentrated exposure to these AI leaders. Now, when it comes to dividends, this is what we call an accumulation fund, so it doesn't actually pay out a dividend. Instead, those profits are automatically reinvested in the background. When it comes to fees, this ETF charges a total expense ratio of 0.49%, which is higher than a broad market ETF, but reasonable for a fund that targets specialised growth areas such as AI. Historically, AIAG has delivered strong returns, particularly as AI adoption has accelerated globally. Year to date, we've seen a growth of 21.39%, and over the past 5 years, it's returned 92.69%, which averages out at around 18.5% per year. So if you're looking for direct exposure to the companies building the AI ecosystem, this ETF provides a convenient, diversified way to invest. Okay, so number 2 on our list is the VANECK Vectors Semiconductor ETF with the ticker symbol SMGB. This ETF focuses on companies specifically in the semiconductor industry. This is the critical hardware that powers virtually all modern technology. Rather than covering the broader tech ecosystem, this ETF targets chip makers, equipment suppliers, and semiconductor designers. Semiconductors are everywhere. They're in your smartphone, they're in your laptops, they're even in your car. The demand for semiconductors has grown exponentially over the past decade, as things such as autonomous vehicles, 5G networks, and chips are becoming even more critical, making this sector a key driver of technology innovation and economic growth. Now, this ETF holds around 25 companies, so it's not as diversified as a broader tech ETF. But this is intentional. This ETF is what we call a thematic ETF, focused on purely the semiconductor industry, and there are naturally a limited number of leading global players in this space. Now, this fund gives exposure to major players such as Nvidia, ASML, Intel, and Qualcomm, which are critical for AI, cloud computing, and next-generation electronics. As expected, it's heavily concentrated on the technology sector, with a strong US and Asian focus reflecting where most semiconductor companies are headquartered. This makes it less diversified than the previous ETF, but highly targeted toward the hardware side of tech and the AI market. Now, when it comes to dividends, again, this is an accumulation fund, so it doesn't pay out any direct dividends. As for the fee, this ETF has a total expense ratio of 0.35%, which again is reasonable for such a focused industry-specific ETF. Over the past year, this ETF has delivered 22.62% of growth, and over the past 3 years, it's provided a growth of 144%, reflecting strong growth driven by the semiconductor demand and AI adoption. If you want direct exposure to the semiconductor industry, this ETF is a great option. Finally on our list, we have the iShares S&P 500 Information Technology ETF with the ticker symbol IITU. Unlike the previous two ETFs, this ETF is a lot broader. It covers the full S&P 500 Information Technology Index. This means that you're covering more of the larger companies over in the US, rather than it being more pigeonholed in either the AI or just the semiconductor industries. This ETF holds slightly more holdings at 69 companies within it, including Apple, Microsoft, Nvidia, Visa, and MasterCard, representing household names and major innovators driving long-term tech growth. The fund is concentrated in technology, with minor exposure to the communication services companies. Geographically, it's almost entirely US focused, which provides deep exposure to the global leaders in tech, but it has less international diversification when compared with AIAG. Again here, when it comes to dividends, this is an accumulation fund, so for anyone looking for passive income, these ETFs are probably not for you. As for fees, this ETF has a much lower total expense ratio of just 0.15%, making it ideal for investors who want broad tech exposure without paying high fees for more thematic or specialised funds. Historically, this ETF has showed growth of almost 25% over the past year, and a whopping 169% over the past 5 years, which averages out around 34% per year, reflecting steady growth from large cap US tech companies. So why would you consider this ETF over the previous two? This one's perfect for investors looking for that core holding in the US tech sector. It's more diversified than the other two and offers less volatility and also lower fees. So that's what I believe are 3 of the best ETFs on the market right now which cover tech and AI. Each takes a slightly different approach. AIAG gives you direct exposure to companies developing and enabling AI, SMGB focuses on the semiconductor industry, the backbone of modern tech, and IITU provides broad exposure to the US tech sector. If you're thinking about investing into these ETFs, you can invest in these on both the Trading 212 platform, but also the Invest Engine platform, both of which are great options because they provide 0 platform fees. Of course, these ETFs carry varying degrees of risk and volatility, so make sure you do your own research. If you've enjoyed this video, make sure you give it a thumbs up and consider subscribing for any future investing insights. As always, I'd love to hear from you in the comments section. Let me know which ETFs you're considering adding to your portfolio. Thanks so much for watching, and I'll see you in the next one.